In the first half of this post, we looked at the revenue side of our NOI calculation. Now, let's look at the expense side and how the end result, the NOI itself, is typically used. By definition, to be considered a real estate operating expense, an item must be necessary to maintain a piece of property and to ensure its ability to continue to produce income. Loan payments, for example, are not considered an operating expense. Because the loan interest is usually tax-deductible, it's easy to see where the confusion can occur. This tax-deductible interest would reduce our taxable income, but not our net operating income. It's not necessary to operate the property. Depreciation and capital expenditures are other examples of things that are not operating expenses. So what should be included among operating expenses? Well, utilities, supplies, snow removal, property management, these are all examples of operating expenses. Repair and maintenance costs. Those are an operating expense. But improvements and additions are not. Those are capital expenditures. Property tax is an operating expense, but our personal income tax liability, that liability generated by the property, is not. Here's a slightly abbreviated list of typical operating expenses, again from RealData's Real Estate Investment Analysis software. In the interest of brevity, I'll plug in just a few expenses, and those are going to total $52,890. Once we have a total for these items, we can subtract it from the gross operating income, and that's our NOI. Income minus operating expenses equals NOI. So now, let's look at that APOD form from top to bottom. So why all the nitpicking about operating expenses? Well, for one reason, because NOI is used when estimating the current market value of a piece of income-producing real estate. That market value is a function of the property's income stream. And NOI is all about the income stream. Investors don't really decide to buy properties as such. They buy the income streams of those properties. In other words, they buy the expected economic benefits. That's where the value lies, not in the bricks and the boards. And because investors, as well as other interested parties, like lenders for example, are using NOI as part of the decision process, the process of estimating current market value, it's important to have a consistent definition of what NOI is, so that everyone is on the same page. That's why we're nitpicking. That valuation process typically uses NOI in conjunction with a capitalization rate, or cap rate, to estimate current market value. Now, the subject of capitalization of net operating income is really a topic of its own, so I won't get into it here, other than to give you this in a nutshell. The NOI expresses a measure of a property's income stream before any debt service, while the cap rate is the investor's estimate of how well his or her capital must perform. An investor or lender or appraiser will weigh one against the other, as in this formula, to estimate current market value. So if the property we saw in our APOD form, the one with the NOI of $80,000, lived in a market where similar properties had sold at a cap rate of 8%, then this property would probably be appraised at $80,000 divided by 0.08, or $1 million. So we can see that NOI can be a pretty important metric when it comes to estimating value. But it also has another important use. I mentioned lenders a moment ago, and any entity loaning money, giving a mortgage, on a piece of income property, is going to want to look at the NOI for another reason, too. A reason besides estimating value. That lender will want to be sure that we have enough NOI to cover our mortgage payments. So, NOI is part of another real estate investment metric called debt coverage ratio, DCR, also called debt service coverage ratio, DSCR. They both mean the same thing. Quite simply, it works like this. DCR is the ratio of our property's NOI to its annual debt service for the property mortgage, or mortgages. Let's say our proposed monthly mortgage payment for this property would be $5,500. That means our annual debt service would be 12 times that amount, or $66,000. If our NOI is $80,000, then our debt coverage ratio would be $80,000 divided by $66,000, the NOI divided by the debt service, or about 1.21. And that means we expect to have about 21% more NOI than we need to cover our debt payments. Is that enough to satisfy our lender? Well, it depends. As a general rule, lenders usually look for at least 1.20, but often they look for more. Every lender has its own required minimum, depending on property type and other risk factors. So we would need to find out what our lender is looking for as a minimum DCR and do this calculation before we ask for the loan. And as we've seen here, the first step in this process is calculating a realistic NOI. I hope you've found this informative. I've tried to show you how NOI is calculated and two important ways that it's used in income property analysis. Also, I promised to tell you about some additional resources on the topics I've discussed. First, I would encourage you to check the outline of my online video course at learn.realdata.com. I go into greater depth there on using the APOD and cash flow proformas for property analysis, on using cap rates with NOI. I discuss DCR as well as quite a number of other key metrics. I also go into much more detail on the topic of expense reimbursements and how they work. I only touched on that briefly near the beginning of this blog post. The course has a number of case study examples, including one that includes an expense reimbursement scenario. Another resource, of course, is the investment analysis software from my company, RealData, which you will find at RealData.com. The Pro edition of that software has you covered on all fronts: build and hold, buy and hold, value add, fix and flip. And with almost 40 years of development behind it, you can count on it to save you from the math and logic errors that too often are the curse of a do-it-yourself spreadsheet model. Now, if you have questions or comments on any of this, please post them here. And as always, I wish you smart and successful investing.